So we've spoken a bit about macro and geopolitics. Let's talk now a bit more specifically about investment markets. What's your current view outlook for the moment on equities, Jonathan?
Yeah, on equities, I'm very, very mixed. I mean, I know that we might have a conversation at some point in our discussion today on NVIDIA and things like that. And people who read my report will know my kind of affection for NVIDIA and all things AI. And the issue with the United States is this whole notion of American exceptionalism. And, it's predicated on some pretty stark fundamentals in a relative sense. And why do people talk about American exceptionalism? Because on the other side of the Atlantic, is a continent that is mired in, zero growth. I mean, recession, really, the recession in Germany, and problems in the UK, the French situation, we know what's happening there. So in a relative sense, the European economic outlook is awful compared to the United States. And moreover, in the United States, you haven't just got the Magnificent One, you've got the Magnificent Seven, all of whom dominate their respective industries. And in Europe, we really don't have anything equivalent. As a friend of mine said to me the other day, Europe is rapidly turning into a museum. Fortunately, there's still lots of people who want to visit museums in Europe. And he was saying to me, without tourism, Europe would be in very, very serious trouble. So the exceptionalism story is the reason why American markets have so outperformed everything else. And if you look at it over the last 5-10 years or so, actually go back even further, last 50 years, the United States has massively outperformed pretty much the rest of the world. And it begs the question that can that degree of outperformance be sustained? And I have question marks about that. Why? Because I think in 2025, the US equity market is on a collision course with the US bond market. And I do think the 10-year note yield in the United States will move up towards 5%. Now, we saw about 9 basis points last night, and we were up 80 basis points from those September lows. I think we nudge up towards 5%. It's not that far away. Now, the last time we were there, we had a little bit of turbulence in US equity markets, if you recall, on October 23. But I think that's the general drift of things. And the other thing, if you actually look at the best performer of US equities in the last several years was the SOX, the Philadelphia Semiconductor Index. And I don't know how many people should be watching these charts. I love my charts, Eugene. But if you look at the SOX index, the semiconductor index, which is really the kind of, poster child of extraordinary US equity performance in the last 5 years, they have not made new highs since July 24. Now we're February. That's a long time. They're quite significantly below their July highs. Now, we know the key driver of the SOX, is, of course, NVIDIA. And NVIDIA, as you know, has kind of run into a little bit of some fairly significant headwinds of late. And then the other thing is, if you looked at the earnings of some of the big names, Microsoft and others, even Apple's being hurt by China sales, reduction in China sales. Don't forget these huge, big so-called hyperscalers are spending vast amounts of money on data centers and the capex related to AI and building out AI capability. And the market's kind of asking the question, hey, you better start monetizing this stuff pretty soon because you're spending, between the three top, whether it be Google, Alphabet, Google, Meta, and Microsoft, the numbers are $65-75 billion on AI-related capex. So there are some question marks there. So look, bottom line for me, I think we're going to have a really rocky, turbulent, bumpy 2025. I think it's going to be a very, very bumpy year. And I'm cautious US equities. If you want to be kind of neutral-ish, I wouldn't get too upset, but I'd still be somewhat cautious. And the other thing, and I know we've had some conversations, Eugene, you and I, on gold and things, but it's really fascinating when you talk to asset allocators around the world. they kind of say, you know, we feel we have to have this money in the United States because it's been such a great performer. But we feel a little uncomfortable because we're so overweight the United States, and we know they're all overweight the United States. And we know that the United States, as a percentage of the underlying international index, is at record levels. So there's this compulsion for, if you're sitting in Liechtenstein or Luxembourg or Brussels or London or Sydney or, I don't know, Toowoomba, you're probably overweight US equities. So there's a lot of money that's already invested there. So I'm somewhat cautious about that. The problem is, if you leave the United States, where do you go? Europe's in a spot of bother, in my view. The earnings outlook, I don't think, is very robust in Europe. And then you've got the whole China question and that whole risk of that narrative around China and geopolitical risk, political risk. Australia kind of sits out there on the edge, and all of us here in Australia hope that no one notices us and that we're kind of kept out of the battle between Trump and whoever he's having an argument with. And we know our Prime Minister had a conversation with him the other day, which apparently went quite well, which kind of surprised me a little bit. But by the way, Trump's always very charming with people. Anyway, and then he puts the phone down and he says something to one of his staff members. Anyway, so yeah, Australia's kind of, you know, we saw CBA numbers yesterday, Eugene. I mean, look at those numbers. They were blowout numbers. I mean, I don't know how they do it, but anyway, they do it. They keep on doing it. But I'm somewhat cautious on equities. I think gold probably has a place in portfolios in the medium to long term. That's another discussion, perhaps.
Yeah.
Bonds. I'm cautious on bonds, Eugene.
Yeah. Okay. Cool. So you're cautious, and I think one of the main reasons, you know, there's always risk out there, but there's a few unknowns. Valuations of equities are at pretty high levels, particularly in the US, particularly around those so-called magnificent sevens. They're not ridiculous, but they're not pricing in a lot of risk. Would that be fair to say?
I think that's fair to say. Again, the issue with the US equity story is you've got this Mag 7 phenomenon, but at the heart of that was that Mag 1, the Magnificent One, NVIDIA, which now is trembling. You know, it was untouchable. It was invincible. NVIDIA was the invincible one, not only magnificent, but invincible. Yeah. And, you know, one of the best CEOs in history in a transformative revolution, which is real. And I'm a big believer in AI as being a transformative revolution that's going to impact every aspect of our lives.